We reported a strong close to the fiscal year, exceeding our guidance across both top and bottom line metrics, driven by demand for the depth and breadth of our platform and the team's focus on customer success. We delivered fourth quarter net new ARR of $86 million, ending the year with a total ARR of $1.46 billion, an increase of 22% year over year, and record quarterly revenue of $405 million, up 31% year over year. On the bottom line, fourth quarter non-GAAP operating margin was a record 27%. This drove fiscal year non-GAAP operating margin to 18%, an increase of over 1,100 basis points year over year. This was also our first quarter of GAAP profitability as a public company. I am very pleased with the team's ongoing cost management and discipline around capital deployment, which focuses our energy on the right initiatives and sets us up for future success. In a recent UiPath and Bain joint study, 70% of executives asserted that AI-driven automation is either very important or critical in fulfilling their organization's strategic objectives. Our business automation platform is the foundation to deliver the value across every organization. For example, a leading US-based financial services firm and one of our top 25 customers started their automation journey with RPA in 2018. They have over 15,000 robots in production, with automations across several thousand processes. And as part of a seven-figure fourth quarter deal, they plan to deploy communications mining in their corporate investment bank, commercial bank, and HR departments. We also recently announced the first of its kind co-innovation market collaboration between UiPath and Deloitte. Deloitte's Smart Finance for Growth companies leverages automations built by UiPath and customized by Deloitte into value-driven packages tailored for the needs of early-stage, innovative companies which require speed and agility. And finally, we continue to deepen our partnership with Microsoft to build best-in-class automation experiences and integrations. This brings AI-powered automation to customers using Microsoft Azure. At our AI Summit next week, we are planning to unveil a new UiPath large language model, which combines open source LLMs, our specialized AI, proprietary knowledge of business documents and communication data. This robust LLM combined with our industry-leading IDP solution provides customers access to what we believe is the most powerful documents and communications AI model on the market. And we plan to continue to invest to widen our leadership in the IDP space. Test Suite, which initially emerged as a tool for automation testing, is quickly becoming a disruptor in the application testing market, with Test Suite customers growing more than 75% year over year in the fourth quarter. A recent UiPath and IDC joint study found that customers using our capabilities have experienced on average more than $4 million in annualized benefits, a 529% three-year ROI, and have only 6 months payback on investment. And in our U.S. federal government vertical, UiPath partner, Fed Results, was awarded an Enterprise Software Initiative Agreement for UiPath products and services by the U.S. Department of Defense for up to $95 million.
We ended the quarter with 10,830 customers, including new logos like Five Guys, Workday, Coca-Cola Beverages Florida, Allegis, Global Solutions, and Tesco, a testament to our strategy of acquiring enterprise customers with a propensity to invest. Our largest customers are also continuing to expand on our platform. And during fiscal year 2024, customers with $5 million or more in ARR grew 50%. Moving on, dollar-based gross retention of 98% continues to be best in class, and our dollar-based net retention rate as of the fourth quarter was 119%. You know, Mark, the way I look at it is we continue to make great progress as a company. I look at last year, and this first half, if you look at the net new ARR, it was down. The second half was basically close to neutral. As you mentioned, when you look at our guidance right now, at the midpoint, we are growing net new ARR. I think we continue to execute. Our strategy is really clear. That being said, our guide is our guide, and we are very clear in terms of the assumptions that are there. And our focus is just on executing this quarter and continuing to execute on our strategy. So look, we obviously don't guide to GAAP profitability, so I won't comment there. What I would say is, two things. We have really good cost discipline and capital allocation. We will have seasonal patterns, right, that will be a part of that. in different quarters. And I just like the overall trend line. We can give more information as we'll update more information at the appropriate times in terms of long-term margins. Yeah, I would say, all of our new offerings, we have a cloud-first mentality in terms of that, and many of the offerings, start with the cloud. I do want to remind everybody we have a hybrid kind of cloud environment. So, from a SaaS headwind standpoint, I would look at that as not impacted by that mix shifting as we move up that area. So from that perspective, we feel very confident about the direction of cloud overall.